So there has been an enormous amount of stablecoin printing these last few weeks. And if you look at the chart, it's just going exponential. With only this last month, the stablecoin supply grew by 5.42%, which is crazy. But then now the question is, does this actually matter for the crypto prices? And so look at the chart I made right here. And the thing why I made this is because in every last cycle, the stablecoin inflows have always built up ahead of these big bull runs that we used to know 4 years ago. And they always outpace the crypto growth in the early phases. But this is what we see happening at the moment. So at the moment, the stablecoin supply is going exponential, while the crypto total market cap didn't explode yet. And so in this video, what I want to do is I want to go over all the research available, all the data that was available on this topic. And so the first question is, do stablecoins actually push the price of crypto higher? So this was the first study I found. This was mostly on non-stable currencies. So basically every altcoin. They show the chart here with Bitcoin, but all the research goes over all the cryptocurrencies. And what it says is, so several studies provide evidence that stablecoin issuance and transfer can impact non-stable cryptocurrencies, particularly Bitcoin, in the short term. Stablecoin issuance may provide liquidity to the cryptocurrency markets, enabling more trading activity, potentially driving up prices. So basically what this paper said was that when new stablecoins are issued, that's basically fresh money printing entering from the fiat system into the crypto ecosystem, which then acts for crypto as extra buying fuel. So let's look at the next research as well. So this one is from 2020, and this one is a research study from the Blockchain Research Lab. And as you can read here, so our event study reveals positive abnormal returns for major cryptocurrencies in the 24 hours before and after the issuance. So this research suggests basically that newly minted stablecoins are used to purchase cryptocurrencies immediately. So that as an investor, when you see big stablecoin issuance, and we got, for example, in our Discord, we got a channel specifically for that. When there's a stablecoin print, it posts a message. But so this research is showing that, but mind you, this is only from 2020, when there wasn't really these big altcoins and big layer 1 chains that we know right now. So what I did was I tried to look for more studies, but unfortunately there weren't really other studies available that tested longer returns, basically 2 or 4 weeks after what it did to the crypto prices. It only measured a couple of hours afterwards, like this study did. This is another study. So this is the BIS paper, and this was on stablecoins and safe asset prices. And they basically found that 5-day stablecoin inflows correspond with measurable impacts over the following 10 to 30 days. So mind you, this is not stablecoins effect on the crypto prices. This is the stablecoin effect on 3-month T-bills. But the reason why I use this is from 2025. And this shows that stablecoins have a lag on other assets longer than the 24-hour period. So this shows 10 to 30 days, which I kind of find interesting, because when I tested it myself, and I tested it with ChatGPT, I put every data in it, so all the prices and the stablecoins. And the conclusion I came to is that it's basically the same as the last paper. So not one day after, we see most results 7 to 30 days later. So basically the results were, if you saw a big inflow in a week, then we saw a strong price gain 2 to 4 weeks later. I also tried to measure, but I don't know if this is correct, so don't take my word on this. But what I tried to calculate was the percentage growth of a cryptocurrency, doesn't matter which one, can be an altcoin, after a 1% rise in stablecoin growth. And what I came to the conclusion is that a 1% rise in a chain stablecoin supply predicted an average rise of 0.1% over the next week, as you can see right here. I also made a heat map out of it. I don't know if you see it very good, but basically this heat map shows the correlation between stablecoin flows and the future returns peak at around 7 to 14 days, lags for 14 to 30 day return horizon. And yeah, you see the same happening as well. Next up, another thing you can do to measure Bitcoin's price or to predict Bitcoin's price based on stablecoins is this one. This is the stablecoin supply ratio. And the stablecoin supply ratio is basically just the market cap of Bitcoin divided by the market cap of all stablecoins. And this basically means just the buying power stablecoins have relative to Bitcoin. And in my opinion, this is actually a very good way to value Bitcoin. And as you currently can see, stablecoins are growing much, much faster than Bitcoin's price, which we could also see in the chart that I made here. But I think this is a good visual representation as well. So when the SSR is in a downtrend, this is actually good for the Bitcoin's price. A top signal would basically be what we saw here. Where we saw these local tops in 2024. Here as well, when the SSR was above the Bitcoin's price, then that's a top signal. A bottom signal would be like this, which we saw here in March earlier this year as well. So currently, based on the SSR and the stablecoins printing like crazy, Bitcoin is currently undervalued. Another thing I saw on Twitter these last few weeks, everyone was posting this picture, and this is also a good thing to look at. So this is the stablecoins rushing to exchanges. And usually what happens is when a lot of stablecoins go back to exchanges, that just means that a lot of people send their stablecoins to an exchange to buy crypto. So this is also the dry powder to buy crypto. So usually what happens is if this goes up, and I made a 7-day SMA of it. When you see this going up, like the research shows, in the next 1 to 3 weeks, crypto or Bitcoin should go up as well. So again, this shows that it's currently a bullish environment for Bitcoin or crypto based on the stablecoins. Another thing I really wanted to talk about with you guys, and I saw this from Good Alexander. I don't know if you guys know him, but I came across this while researching stablecoins. And what he said is, and maybe one of the reasons why stablecoins have such an enormous growth at the moment, as you can see here, might be that the US government is supporting it. So the US government, as you know, is enormously invested into stablecoins and by extension crypto, of course. And the reason why I think it is, and what Good Alexander said, is that the US government sees stablecoins as a way to keep the dollar dominant. And that's super important because as you can see here, these are the stablecoins by currency. There are just no other stablecoins than the US dollar. The US dollar is 99.79% of all the stablecoins that exist. There basically are no good euro stablecoins or pound stablecoins. There is nothing. I don't know if there is even a pound stablecoin. So that's the most important thing, and that's why the United States government is super bullish on crypto and USDT. Why? Because global markets have just no other choice but to demand dollars. So the US government is forcing everyone to settle in USDT. And that's just why the stablecoins keep expanding. It's just shadow monetary printing to finance the deficits and keep liquidity flowing. That's just it. Why? Because the US is afraid to lose its reserve currency status. So I brought a chart for you guys. So at the moment, the US is already for 110 years, they have the world reserve currency, and by extension, they are the world's dominant power. So yesterday I saw, because Ray Dalio always talks about this, and I saw a podcast of him on the Diary of a CEO. And what he says is, normally, a dominant world force lasts about 80 years. But you can extend this a little bit longer if you take care of yourself. So, and then what by take care of yourself, he meant if you take care of your country, you can extend it a little bit longer. And that's what the US is trying to do. So I think the US is trying to, that the dollar remains the world reserve currency. So it prolongs the US dominance on the world stage. And I think they're doing this with stablecoins. And so by extension, I think this is super bullish for crypto because, of course, and everyone knew this already, if the world dominant force with the world reserve currency is actively promoting crypto, of course, that will be good for crypto. And I think this might be the reason, because they want to push everyone into stablecoins. Everyone needs to buy stablecoins. And it also helps just the dollar. So they're not, maybe not only super bullish on crypto, but I think it has more to do with the stablecoins. But sorry, enough rambling. So let's go back to the stablecoins. And I always view myself as more of an investor kind of YouTuber. So what I always try to do is I want to have that my viewers know what they have to do afterwards. So a very good thing what you can do is, and obviously everyone wants to hear this because everyone thinks an alt season is coming. So which coins can you buy based on the stable coins? So a lot of people are just saying, yeah, you need to buy the stable coin with the most supply on it. So, and as you can see, Ethereum is crushing it, Tron second place, and Solana is only third with only 4% of the whole supply. But the thing is, growth in your stablecoin is far more important than the absolute level. So this doesn't actually matter that Ethereum has 55%. This is basically priced in. So what you need to do as an investor is you need to look at the growth of the stablecoin. And I found this tweet from Tamar. So mind you, this is the head of stablecoins from Solana. So she is obviously a little bit biased. That's why I rechecked what she said. But according to her chart, the stablecoin supply year over year is most bullish for Solana, and more bullish by a 2x the amount of, for example, BNB chain. So I digged a little bit deeper into it because obviously, according to this, you need to invest in Solana. So I checked it myself, and you can do this on Artemis Analytics. And this is also the year over year. And what you see here is Sui and the SAI network outperformed the stablecoin inflows a lot more than Solana. So she just left out Sui and SAI, which are super big stablecoins. I also left out some stablecoins that are not super important, but just with the big ones. Let's for example, Sui. I think Sui is a super big coin. Where is it? It's the 15th. So I don't really know why she left it out. Like I said, she might be biased because she works at Solana. So according to this, SAI network and Sui would be a much better investment than Solana, according to the stablecoin growth, of course. Of course, I always say this, you need to look at everything. This is not the only metric where you need to base your investment decisions off. But like we said, and like we saw in the research, year-over-year growth is not the most important metric you need to look at. What we saw was 7 days to a month is the better metric to look at. So I did that as well. And if you look at this, Sui and SAI network are in minus 20%. So actually, to invest now into SAI and Sui would not be the best decision. So based on this, it's actually Avalanche. But since Avalanche is here only 1% growth over the last year, I'm not going to invest in them either. Well, based on this, and I don't have Avalanche. But what we see here is that Ethereum is second place. So this last month, Ethereum saw an 11% change of its 11% growth of its stablecoins on its network, which is enormous for the amount of stablecoins they have. So they have 159 billion stablecoins, and this went already up by 10%, which is crazy. So I think Ethereum is the clear winner here if you need to look for a chain to invest in based on the stablecoin metric. So just another final word, and let me take the chart again. So at the moment, if you see, so the stablecoin growth metric is super bullish. You can see it super clearly. It's outpacing the crypto growth. And what you guys need to understand, and what I just said, is this is not the only driver of the price. You need to look at a lot of other metrics to make an investment decision. This video is solely on the stablecoin metric, but don't base your investment decisions on this. This maybe adds a few percentage points to your decision, but this doesn't make your decision final. But of course, I cannot disagree. Like with this big of a gap, of course, this is super bullish. Of course, this is bullish. I'm a very big advocate that stablecoin growth is liquidity into the crypto ecosystem, which is super bullish for the crypto prices and especially for altcoins. So this was it. I hope you guys liked the video where I really deep dive into a metric. And of course, I basically had to do it because maybe an alt season is coming up. So if you guys want more of these videos, please like it so it helps more people find this video. And then I see you all in the next video. So like and subscribe, and see you next week. Bye guys.